Vaulta is a Web3 solution that will enable you to bridge the gap between traditional finance and basically the finance of the future. I'm Big Beard Samurai. I can't shave it off. It's part of the brand.
Yves La Rose, the visionary CEO and founder of Vaulta. Vaulta isn't just a rebrand, it's a revolution in finance.
What helps you to produce this type of trust that people are ready to hold this amount of money on a EOS?
When people interact with new innovative products, they want to know that it's secure.
By integrating blockchain technology with traditional banking, Vaulta offers rapid, low-cost transactions and seamless interoperability.
People started wanting to do more with their Bitcoin. People want to actually use the asset. They want to have utility to it. We have around $700 million right now of Bitcoin staked in the network. Vaulta is not making it great again. It's new.
Hello, everyone. This is a new episode of Headliners, and today I have a very special guest, Yves from EOS. The guys just finished their rebranding to the Vaulta, and we have a great chance to speak with them directly. So, Yves, nice to see you. And the first question for you, how do you plan to integrate blockchain technologies with the traditional banking service? Because I know that the Vaulta now is looking to make a revolution in this field.
Vaulta essentially is an operating system, right? It's a layer one blockchain. And so as an infrastructure-based layer, there are multiple ways that it can integrate into traditional banking services or banking system. We've laid out kind of what our vision is as part of that rebrand in terms of 4 different pillars. We can get into them into more detail a little bit later, but the idea is basically being able to provide wealth management solutions, payment consumer, more direct payment consumer solutions, tokenization solutions, as well as an insurance product. And so on multiple levels, you're essentially able to bring about traditional banking services, leveraging Web3 technologies at the settlement layer. And in different cases or different products, then there's more of a end-to-end blockchain integration. And in some instances, it's more of a blockchain touch point. So it really depends on which product you're building. But the goal is to integrate as much as possible so that you can get the advantages of both worlds. And by creating that bridge, you're able to create efficiencies, lower the cost of doing business, ideally increase profit margins for every player or stakeholder within the equation, and just ultimately create a better user experience, more democratized approach to financial services.
What do you think can become your, let's say, core product or maybe core use case? Can you make any example? Because I'm speaking a lot with the people who are building different things on the blockchain, but for the end retail users, sometimes it's quite hard. So what will be your headliner in case of the real products?
Sure. I can give one example of something that we're working on. So for example, when you're in the current traditional financial space and you have a bank account, usually for most users, you might have a checking account, saving account, maybe you have access to mortgage, maybe you get a credit card, but you're quite limited in the services that you can get from a bank unless you're at a certain wealth level. If you're an institution or if you are an accredited investor or if you're a wealthy individual, you can get access to private banking services. And that can offer extra products such as more yield generation, maybe cheaper investment products. So your MER percentage will go lower. Perhaps you've heard of funds where there's a barrier to entry. You need $100,000 to get in or $250,000 to get in. And that gives you access to a fund that's managed at a much lower rate that offers perhaps higher yields. What we're trying to do as one of the products is integrate that CDFI component. So being able to take digital assets that earn yield either directly on chain through the protocol and complement that with then yield strategies based on your risk profile. So think of right now, if you're a regular user, you don't really have access to a quant team. You don't have access to institutional grade products where you could choose your different risk profile and add yield based on that risk profile. And at the very conservative level, it can be something like a delta neutral trading strategy, which can add yield at a comfortable rate, but on the lower rate to your current staking yield potential. Or on the very high end, if you are a little bit more aggressive with that particular part of your portfolio, have again something that's a little bit riskier with a little bit more volatility in terms of its return, but then can offer the yield that you're looking for. So we're trying to integrate the institutional grade products that typically are only accessible by very few, democratizing that down to retail users. So that's something, for example, that we've piloted and that we're currently working on, but that we'd like to bring down to retail users. We call that a CFI DeFi product. And right now, an example of what we're doing on that is with SEFU, mirroring assets onto Binance. So you're able to have your assets on chain within a custodian account because they're on chain, they can earn on chain yield. While in the background, those assets are mirrored onto, in this example, Binance, running delta neutral trading strategies. If that's the risk profile that you prefer, that earns yield, which is brought back to you. So your tokens are always safe. They're on chain and they're earning yield, but they're also going at work. They're working in the background for you. And the only reason why we're able to work on this kind of product is because of economies of scale. So traditionally, like I mentioned, if you want access to banking services like that, you need to have a certain wealth level. But because of blockchain technologies, you're able to bring down the administrative overhead of offering product because there's less middlemen in between. And so you're able to generate higher yields at a much lower barrier of entry.
So this is a great vision and a great plans. How it will be implemented in real life? It will be a mobile app, or I don't know, some time of Google Home add-on, or just a website or a wallet. How I can interact the retail users with all of these products?
Well, depending on the product, right? The product I just mentioned, for example, you would interact with it just like you currently interact with the Vaulta blockchain. And so you would stake your tokens. You're using MetaMask, and that's what you would use to basically interact with the product. If you're more of a native user and you're not coming from the EVM side of things, then you would interact with, for example, Unicove as the official portal in EOS. Your signer underneath would be Anchor or Token Pocket, for example. So depending on the product, you would interact with it in the similar fashion that you're interacting with it now, if it's an on-chain product. If it's an off-chain product, for example, like our insurance product that we're working on, that we'll be launching, that's less for retail focus. So that's more for businesses who want to deploy and create products on the blockchain. One of the issues that we've seen is that there's always a gap in terms of getting access to financial services if you don't have access to an insurance. And I'm talking about regular directors and officers insurance. That might be boring for retail. It's actually very important, because if you don't have teams that are capable of developing on a blockchain in a manner where they can create their regular bank accounts to be able to make payroll, to be able to accumulate funds, maybe fundraise, and then also being insured because that's a requirement in order to get those financial access to services, then they can't create products for the retail user that's actually on chain. So that's kind of at the other end of our pillars, is more that off-chain solution. But generally, for the products that we'll be building, they'll all be on chain and they'll be accessible in very similar fashions that you currently access your applications.
Wow, I get it. I want to ask you about the naming, because I think that you are now become very trending with a new naming like Vaulta, because we see a lot of products that's called vaults. How do you choose this? Why you decided to make this rebranding, and what does it mean really for the EOS users, for the EOS network? So it will be complete transfer, or it will be a fork, or can you tell me a little bit more about this?
Essentially, the rebrand for EOS started, I'd say, about 3.5 years ago or so. So when the foundation was created, we inherited basically nothing. We didn't have any IP with the old name. We didn't even have access to the GitHub repos. So we needed to essentially create our own GitHub repo. And due to IP requirements, we needed to create a new brand just for the software stack itself. And we rebranded that to Antelope. And then Antelope over the years got different iterations, and now we're running spring version of Antelope. So that was more on the technical side of things. But the reason why I bring that up is from the very beginning, we didn't inherit EOS. We didn't create EOS. The community didn't inherit EOS. EOS itself, the name, the vision, where that came from, really wasn't who we currently are and who we've been for the last couple of years. So from the very beginning, we saw rebranding somewhat as a spectrum. On the very low end, at the very beginning, it was simply changing the underlying name for the code base. But we knew that someday, step by step, we would be working towards a name change and a token ticker change. And this is where we are now. And I think the culmination of these 3.5 years or so, it's looking at what we've built in terms of functions, functionalities, in terms of investments that we've made through our portfolio companies, in terms of our capabilities and where the industry is going as well. What I mean by where the industry is going is obviously the landscape of blockchain as a whole has changed significantly since 2017 when EOS was announced, right? 2017, put yourself back at that time. CryptoKitties had just taken down Ethereum. Gen 3, layer 1 blockchains did not exist yet. And so we were caught in this paradigm of we've got smart contract platforms, but we don't have any that can scale because there was no demand for it yet. 2017, 2018 came about, ICO summer, and you've got basically for the first time the idea that blockchain technology might be used at scale. And so they need to be able to scale. EOS comes about as one of those first blockchains. And the dream that it set, the vision that it set was purpose built, I think, for that time. But we're now in 2025. Things have changed. We have standards across the board. For example, EVM is to a certain extent become a standard. We've got more integration within institutional space. With last year, the Bitcoin ETFs being approved in the United States, we're seeing that the capital that is in the blockchain ecosystem has matured significantly since, let's say, 2017. The kind of stakeholders that are here, the kind of products that they're looking for, even just looking at the tech and what it can now do compared to what it could do in 2017. 2017, 2018, everybody was focused on TPS. TPS obviously is still very important, but it's not as relevant as it is today. There's more to it than that. And so the ecosystem has evolved, and we've evolved in the background as well in terms of what we've been working on and the direction that we've been heading in. And we saw that there was a clear gap between what the branding of EOS brought about when people think of it and where we actually were, who we are, what we've been working on, and where we're going. There was a clear mismatch. And so underlying the rebrand is really a business desire to have better alignment between the brand and who we actually are. The name Vaulta itself came about through multiple stakeholder sessions. We went through a large process. In order to be able to get to this. In the end, we had a few short runners, and Vaulta was quickly chosen in part because of its inherent representations. When you hear about it, the first thing that you think of, like you mentioned, is a vault.
It's a vault. Yeah, it's safe. Security, yeah.
And when we go market outreach, we see that security is still top of mind when people interact with new innovative products. They want to know that it's secure. And EOS has been running for 6.5 years with literally zero security incidents. And so for us, and literally zero downtime as well, we've been up and running zero downtime for 6.5 years. So for us, that was really important to highlight that in the name. So you've got that vault-like impression. Etymology of Vaulta comes from ledger, scroll. Inherently, a blockchain is a ledger. And so that name also is kind of transpired from that. Vaulta also makes you think of Alexander Volta, who discovered electricity and did great advancements on that front. And so it also indicates somewhat of a rebirth, unlimited possibilities. Think of when electricity first came about, all the infinite possibilities that now could come about in terms of what was now possible. So there's that inherently in it. So there's multiple key factors that went into the decision of the name itself. And then there are maybe less interesting reasons. But for example, we were able to secure the domain. We're able to secure trademarks. That's really important. That's not maybe front facing and that users don't really think of, but having a good website, Vaulta.com, for example, is a premium website. It's actually very difficult to find that. When we were EOS, essentially, we had to reserve, for example, the name EOS Network Foundation, not necessarily by choice, but because that was the only thing that was available to us. EOS Network was not available. And so that's less interesting, but it did go as part of the decision-making process in terms of why we chose that name. And ultimately, the feedback that we've received on the name Vaulta, on its origins, on our vision and direction of where we're heading. I forgot to mention, Vaulta also makes you think, like you said, Vault, it makes you think of bank, and our direction is Web3 banking services. So Web3 banking is really our core. And so everything tied just very well together with that name.
In a few words, what exactly Vaulta is?
Vaulta is a banking OS. Vaulta is a Web3 solution that will enable you to bridge the gap between traditional finance and basically the finance of the future.
What about you personally? Can you tell me a little bit more about your story? Maybe how you decided to join a product and why you decided to stay with the product for so many years, and where we are now? What is your main responsibilities and maybe plans for the future from the personal opinion?
Sure. So, where would you like me to start? How far back would you like me to give you kind of my journey into and where we are today?
When you were first inspired with the EOS, and why do you choose this as a, let's say, network or blockchain?
Good question. So I've been in the blockchain space since 2010, give or take. I started mining Bitcoin very early on, and I didn't really jump into blockchain as in full time and start developing projects until later on. But I was very early on looking at the technology, mining, and seeing the potential for this. I did not necessarily see the financial potentials for it. And so, no, I did not keep any of the Bitcoin that I mined. I used to spend them and basically buy, more mining capacity. But fast forward to 2017, 2016, 2017, I had a renewed interest in blockchain technologies. I was working as an economist for the federal government here in Canada. 2017 ICO summer, I started exploring projects very, very deeply and started reading basically all white papers. So put yourself back in 2017, projects were launching every day, many, many projects. And EOS was one of those projects that looked very promising. You had founders that had run previous projects and they had had experience running in projects on the technical front. They were raising tremendous amount of capitals and they were making very big, very bold commitments to the ecosystem in a different way, right? People were experimenting with different consensus algorithm, experimenting with different ways of being able to do token allocation in terms of the initial distribution, in terms of the token raise as well. And EOS just really fit all the check boxes that I was looking for. It was innovative. It seemed to be backed by a really strong team. It was raising a lot of capital from a technical point of view. It seemed like it had a really bright future and it had learned from previous projects. And so it was going to position itself as an underlying operating system. And I really believed at that time that what we needed was something that'd be able to take us into the future. I thought that at that time, blockchain is here, we've got demand, and we need something that's going to be able to deliver on that demand, essentially supply. And EOS really checked all of that. And alongside with partners, we launched a validator on EOS, and we quickly became one of the top validators on the network. But over time, we saw that a lot of those promises and those commitments that were made during the token sale were not being delivered on. 3.5 years ago, in summer of 2021, or I guess 4 years ago almost now, I left the validator space and I created the foundation. The foundation was created to basically address a need and a gap that I saw within the ecosystem, where funding was lacking, coordination was lacking. We didn't really have any direction. We had been left to a certain extent very disorganized and in chaos. There was no foundation had been set at the onset, and so there was no somewhat coordinating force, a centralizing force. And obviously, blockchain is known for decentralization, but there are definitely some efficiencies and some benefits to centralization, and we were missing that. We were too decentralized, and so creating the foundation really gave us guiding point or a direction to march in. And then over the last couple of years, we started adding different functions and functionalities to the ecosystem. We created a venture arm. We created an incubator in the form of labs. Multiple different components were added as we basically built the ecosystem from the ground up. We essentially had to restart with no capital, no token sale. We essentially inherited the project without necessarily, we inherited zero of the capital that was done. And so it brought about its own challenges. But now it really gave us that underlying resilience that I think a lot of products don't have. And so that gives us a huge advantage going into the future because we built it from the ground up. We did not inherit any capital. We did not run an ICO. And so we really had to start from zero and create very, very, very solid foundations to what is now known as Vaulta.
Why you decided to, let's say, evolve from the EOS than to build something new from the scratch? Because at the same moment you build everything from the scratch, but you still has this legacy of EOS in case of the branding, in case of the history and something like this. Does it helps or maybe it stops you in some way?
I mean, it's a little bit of both, but ultimately the answer to your question is community. The EOS community and the Vaulta community is incredibly strong. It's incredibly resilient, like I mentioned. It's been battle hardened. And so community is everything in this space, right? We talk about, people throw around the word community and it's somewhat ephemeral in the sense that it doesn't really mean much. But in our case, it really does mean quite a lot. We leverage the blockchain itself to be able to change the blockchain structures, the governance structures. We just redid the tokenomics, for example, last year. We leveraged the actual tool, the underlying blockchain itself to be able to create something new. And there's something very powerful in doing so, right? We think about eating our own dog food. It's nice to create a blockchain and it's nice to talk about communities, but when it's core to who you are, I think that creates something that really can't be replicated elsewhere. And that's really why we leveraged what we currently had and basically in a way took it over, took command of it. We took charge. And that makes it that our core is incredibly strong.
So can you clarify it for me? The EOS was launched back to 2017. It was a token distribution and something like this. So you had some allocation, you run your own validators. The team was looking to build something, but they failed it. And then you decided to build your, let's say, EOS Foundation to direct the company, to direct the blockchain to the new heights. So, but now, who really pays for the service, for the system to be operate? I don't want to ask who is controlling blockchain, but really who covers all the costs? For me as an entrepreneur, yeah, it's something like you had something, you decided to evolve it. And I want to ask, okay, and where are the guys who started it? Let's say, how was the transition? How you get the control? Because from the business perspective, if you don't have, let's say, enough control, it can be decentralized. But maybe you will do something big and then someone will, I don't know, sell all his resources, all his EOS when it will be that top moment. So that's my question.
Very, very good question. So as an outsider, I can understand how that's difficult. So let me try to explain, and feel free to interrupt me if you want further clarification.
Okay, sure.
So as a validator, we did not get token allocation. That's not how the token economics for EOS work. The way that the token distribution on EOS worked was essentially there was no foundation, no pre-mine, no team allocation. And so it was entirely circulating supply with a gradual rising level of tokens being minted as inflation. That inflation percentage, make it a little bit simpler, was set to 1%. There was a period where it was higher, but it immediately got cut. There was no use case for it. So it's set at 1%. There was also functions on the network that basically built up network fees, or that were accumulating network fees. Primarily two functions on the network that had been accumulating network fees from network launch until when we created the foundation. Those two being premium names. On EOS, we've got a name bidding system. So if you're familiar with EOS, we don't have that long string of letters and numbers that form our public keys. So we do have that in the background, but your name, your account is actually a 12-character legible account name. So we had a system whereby if people wanted to have a premium name, for example, if you want Nick, let's say we spell it N-I-K, that's a 3-letter account name, that's extremely premium, you would need to bid for that. There was a bidding system, and there still is a bidding system on chain at the protocol level, and the network itself charges a fee for that. And so there were network fees accumulated in a bucket. Alternatively, RAM on EOS is also tokenized. And so if you want to create accounts, if you want to deploy smart contracts, if you want to write data to RAM, and I talk about actual physical RAM in hardware, so the validator nodes and all the APIs need to have RAM in their computers, we have that as a tokenized asset on EOS. So you could buy and sell RAM on the network in order to be able to predict your future use cases. So you know that if you want to do an airdrop, or if you want to allow for account creation and subsidize that cost for users, you need to have a certain amount of RAM, and then you would allocate that out. So you need to buy RAM. And again, the network had a mechanism where you buy RAM and sell RAM directly to the protocol. And then there's a nominal fee that's charged by the network for this. That went into a bucket. So when the foundation talks were about, we had about 3.5 million EOS in those two buckets, and basically the savings bucket that accumulated from the name sales and the RAM sales. The network, essentially, there was no centralizing force, as I said. So the original team that did the ICO, they never had any governance control, and they were never really present. All the operators on the network are, different entities. Think exchanges, infrastructure providers, a little bit more community-based validators, some of them creating applications on chain and then leveraging the application to secure tokens, essentially, because EOS is DPoS. So in order to be ranked in position, you need to attract stake. Very similar to proof of stake, but in this case, it's delegated proof of stake. So as a user, I can keep my tokens, but I can delegate my vote to you. So I can vote to you while still keeping my tokens. So slight difference on proof of stake. We had a large set of validators that are all decentralized all around the world, different jurisdictions, none of them being the actual token project creator, right? Completely separate. And so in order to be able to create the foundation, obviously you require funding in order to be able to operate. And so I created a plan, started doing some outreach to the token holders, obviously because I was a validator and I'd been in the ecosystem for 4 years, 3.5 years at that point. I had a good idea of who the token holders are. I was very involved in the community. We had been running applications, running off-chain events as well. I knew the other validators very well. I'd been traveling for years, meeting other validators, because on our voting system, essentially, you must get, to a certain extent, the support of all validators in order to achieve the barrier to become a validator. It's not good enough to just have your own tokens or have people vote for you. You also need a global consensus of everybody else believes, to a certain extent, that you're a good operator, that you're a good validator, you're not malicious to the network. And so through stakeholder outreach sessions, we essentially got consensus. Consensus on EOS means 15 out of the 21 at a minimum, 15 out of the 21 top block producers must agree to changes on chain. That's why I say we leverage the blockchain itself to be able to create the foundation, to be able to fund the foundation. We then created foundation accounts, transferred over that original 3.5, give or take, million EOS as original funding for this. And slowly over time, we started creating value for the network. And then we went back to the block producers and the token holders periodically every 6 months or so to ask for top up on funding. Here's what we've been doing. If you like what we've been doing, if you believe that there's value, we're requesting additional support. We did that for about 2 years until eventually we did somewhat automated the process, where at some point then there was a certain level of inflation that was coming to the foundation. It could be stopped at any time, but we didn't need to go back every 3 to 6 months to ask for a top up, because we had generated enough trust, enough value, that now that function had been ingrained within the blockchain itself. And eventually, when we changed the tokenomics last year, as I mentioned, we added other buckets, other entities that fulfill particular functions in the ecosystem that are all funded essentially by the ecosystem. But when we did the tokenomics, we also burned 80% of future token supply. We changed the market, the token cap from 10 billion down to 2.1 billion. We locked up those buckets with a drip, and we made them matching the Bitcoin halving cycles, so that every 4 years, the amount of tokens that these buckets receive get half and half and half. So essentially, they will receive tokens in perpetuity, because the number always goes half and half. So theoretically, it goes on forever. At some point, obviously, it becomes negligible. But this really aligned the incentives so that the entities receiving tokens from the network are incentivized to see the value of the network grow in order to be able to offset the dwindling supply of tokens that they receive. That's in an eggshell, kind of the entire process. I'm simplifying it to a certain extent, but we're talking about months and months of preparatory work. We're talking about an ongoing relationship with the token holders. So yes, it really is decentralized. As the foundation, we have zero on-chain powers. We do not run validators. We have limitations. We've got a mandate in terms of what we can do, what we cannot do. We hold monthly validator meetings where the validators basically kind of set course again in terms of where we're going, what we're doing, what we're focused on. We run weekly meetings more on the technical level. We run weekly meetings with the community as well. And so it's accumulating data from the token holders on an ongoing basis to be able to readjust in which direction we're going. And through that, we've created many different projects, many different initiatives to be able to always reinforce that. We are set up in a way that we constantly get information from token holders to determine what's our best direction that we want to head in based on what the token holders ultimately believe. And at any given point, the token holders are always in control. The block producers are always in control. And so if ever there's a misalignment with what we are doing and what the token holders would like us to do, they ultimately have the on-chain power. We have no on-chain power.
What is one of your favorite projects or initiatives that was launched on EOS? Let's talk about more specific things.
Sure. I mean, the one right now that's the most exciting is XSAT. XSAT is our Bitcoin scaling solution. We launched this, and it's our flagship product right now. We launched this at the end of October last year. XSAT is basically a Bitcoin transport layer to a certain extent, if I really want to make it as high level as possible. XSAT essentially is also a decentralized UTXO database. When Bitcoin started scaling, or projects started scaling on Bitcoin, think of ordinals and ruins. When people started wanting to do more with their Bitcoin, they want to start doing more, leveraging the asset for more than just holding and ideally seeing it grow. People want to actually use the asset. They want to have utility to it. One of the big challenges with those kinds of projects is that they always have to store their data off chain. It's simply too expensive to store on chain. And so obviously the Bitcoin UTXO, the network itself, data is decentralized and powers the network. But a lot of the scaling solutions, a lot of the projects deploying and leveraging the asset were all off chain simply because the economics just didn't make sense. So we wanted to offer a data availability layer for Bitcoin to be able to help scale Bitcoin. And that's essentially what XSAT is. We very quickly grew our TVL. We have around $700 million right now of Bitcoin staked in the network. And so that creates an underlying value to the product itself. But then our method of being able to scale Bitcoin is quite unique. We call it a hybrid consensus mechanism. And so it's a combination of POW, robustness, and trust with POS, scalability, and flexibility.
$700 million locked in Bitcoin on your platform? On the EOS. Wow.
On XSAT, yeah, correct. Yeah. Essentially in the back end, it's a virtual machine, EVM. And so on the back end, it's running on Vaulta. It's consuming Vaulta resources. It's storing the data, the UTXO data. It's storing the assets as well. It's locking them in bridges. But yeah, so it's operated and run on Vaulta, but then it's a bridge or it's a connection to Bitcoin, essentially. And then multiple moving parts in between. But that's essentially positioned as a Bitcoin transport solution.
What do you think? What helps you to produce this type of trust that people are ready to hold this amount of money on a EOS, on this platform, on Electra? You must provide an incredible trust.
I think it's a couple of things. I don't think it's just one variable. And obviously it depends on each user. I think it starts with, as I mentioned earlier, I started mining Bitcoin in 2010. For me, that proof of work, security, that robustness is incredibly important. Not your keys, not your crypto, basically having that position of these are my assets, they remain under my control. That was very key to the architecture and the decision-making processes in XSAT. And we've got a few different ways that people are locking in their assets. And I can go into detail in terms of the different mechanisms. There's retail, there are validators. I can talk about the mining pools. So mining pools are the actual mining pools on Bitcoin. So they're incentivized, and we've got about, varies, but let's say 48 to 58% of hash power that's currently synchronizing the UTXO data onto our network. So they're incentivized to do so. The validators then are incentivized to do so. It's all a mining mechanism. There was no token sale. There was no pre-mine. There's no team allocation. And so even just looking at the tokenomics on how we create that trust was key to that decision. I can go in as many details as you want.
I heard that now you plan to make a switch from the EOS token to the Vaulta token, right? So it will be a new type of economic or just switch of the ticker?
It's a swap, a one-for-one swap. And so the name has changed. It's now the Vault. It's now Vaulta, essentially. The token ticker has not been released yet. We will be announcing the token ticker early in May. So that's still kept a secret, basically, for now. But once that's announced and once the swap goes live, essentially it's as vanilla as possible. It's a one-for-one swap. So if you own one EOS token, you will own one Vaulta token. You'll be able to swap for a period of time bidirectionally. What that means is that you could swap from EOS to Vaulta back to EOS and back and forth for a period of 4 months. And after 4 months, essentially, we will shut down that function and it will be unidirectional only. So only from EOS to Vaulta. That 4-month period is important because it gives developers an opportunity to be able to rewrite some of the code if they need to make changes for the applications that are running to ensure that everything is good. And then once that's set, basically then EOS will cease to exist to a certain point, and then the Vaulta token will be the new and the current version of the tokenized asset on chain.
Amazing. What is your, let's say, go-to-market strategy? How you plan to make Vaulta great? I want to say great again, but not great again. Like how you plan to make Vaulta great?
This started off basically with the go-to-market strategy of make EOS great again, mega as a play, obviously on mega. Yes, you're right that Vaulta is not making it great again. It's new. We posted a blog as we announced the name last week, and that goes into tremendous detail in terms of what our vision is. So I talked about the 4 pillars earlier: the wealth management, consumer payments, tokenization of assets, and insurance. In each of those pillars, we have a go-to-market strategy. We have different projects that we're envisioning. Some of them that we will create ourselves. Some of them are already underway. Others, we will set the infrastructure layer and showcase what's possible, kind of as a white glove solution where we eat our own dog food because we've got licenses in certain jurisdictions through our portfolio companies or ourselves to be able to create a product. But then because we're essentially making the architectural blueprint known of how you can do this, then somebody else with a different license in a different jurisdiction can essentially come in, leverage the Vaulta infrastructure to provide something very comparable in the jurisdiction that they operate in. Go-to-market strategy in the long term is really to focus on that Web3 banking, those 4 pillars. In the short term, it's varied. So last week, we announced that while I was in New York, at DAS New York. And so that was the first time that we introduced this publicly. We made the name known, but the work actually started back about 7 months ago when we started talking to stakeholders, to the validators. Here's what we're thinking of. This came at the request of token holders. Token holders have been waiting for this for a very long time. They wanted us to rebrand. And so it's not one thing and then it's done. This is a very, very lengthy process. For the exchange's point of view, we need to work with all exchanges to be able to ensure that they support the transition, that they support the swap. So that in itself is a go-to-market strategy. We've got a trading competition right now running on Binance. We just launched on PancakeSwap and had a trading competition there as well. And so that's part of that. Next week, I'm heading to Vancouver and I'm going to be announcing a particular product. And so that's kind of fresh off the press, a little bit of alpha there. And over the coming months, we have a bunch of other announcements leading up to and culminating to the actual token swap live. And I'm going to be giving a keynote at Bitcoin 2025 in Las Vegas on the Nakamoto stage. And that's really where we culminate kind of the go-to-market strategy. But it doesn't really end there. Obviously, once that's live, the work begins in a way because now Vaulta exists. And then we've got our continuous go-to-market strategy there, whether it be marketing campaigns, trading competitions, staking events, partnerships, actual deployment of products. I mean, the list goes on. It's quite extensive.
It's excited. It's a little bit different because you need to relaunch a product. What about the current metrics? Maybe what is your main metric right now? We do not care about the EOS or Vaulta price. I mean, maybe some of the other metrics. Maybe you are looking for the TVL or for the number of active users or something like this.
In terms of TVL, our TVL has been growing significantly and month over month. If you look at the stats month over month, we're always top 10, even top 5 performing blockchain in terms of TVL. We've grown from when we changed the tokenomics, we had about 50 million EOS locked in the network to, I believe now we have a little over 300 million EOS locked. That represents a good month over month growth, but more importantly, a little over 300 million EOS is a significant percentage of the actual circulating supply. So if we look at the circulating supply,
2.1 billion,
that will be achieved, let's say in 30 to 36 years, give or take. The current circulating supply is around 1.5 billion, a little over that. But in fact, because there's a treasury in there, it's not really circulating. The actual circulating supply in the hand of users is about 1.2 billion tokens. And so that's about 25% of tokens that can be staked are staked. And we've seen that number grow, as I mentioned, month over month. That's a very key metric. In terms of wallets and accounts, we've got a little over 6.5 million accounts on chain, and that grows at a rate of a few thousand per day. And then depending on when we have, for example, like staking campaigns or trading competitions right now, we see it even further grow. So there are some weeks where we add, a couple of 100,000 different users and wallets. On the developer front, everything can be seen on GitHub, but we have a very solid base of protocol level developers. And then we have further extended, community developers and people that contribute to different projects, to different code. And that's seen a growth month over month for an extended period of time. So I think those are the, really key metrics. Outside of this, though, when we look at the number of funds that EOS are added to or the presence that EOS has, so regardless of the price, for example, a couple of months ago, Coinbase created their top 50 index. EOS was added to the top 50 index. In that 50 index, there's a smart contract platform subsection. There's only 16 projects. EOS is one of those 16. In terms of token listings, we're currently in talks with more exchanges. EOS is listed on over 200 exchanges. There's still some exchanges that are either new and that are now created because they're regulated in particular markets, and they're outreaching and asking to be listing Vaulta, basically, or EOS or Vaulta. And so that's also a key metric, is that we're quite deep liquidity, a lot of exchange listings. In terms of liquidity, like I just mentioned, we trade roughly $200 million per day. And so it's got that very deep liquidity. When we look at the 24-hour volume to market cap ratio, it's consistently in the top 15 to top 20 projects. We're looking at about a 0.2 ratio, which is incredibly high, especially for a token in the top 100. We're ranked, I believe, about 71, 72 this morning. That metric is very, very important. It means that you actually have liquidity. If you do want to buy or sell token, there's no slippage or there's minimal slippage, even at large amounts. So that's key for a project our size. And that's key as well for traders who want to be able to take larger positions and do some back and forth and set positions, whether it be future calls, whatever it may be. They have the liquidity to be able to do so, and the exchange of those things to be able to do so.
So talking about trading competitions, you measure only the trade that made on decentralized exchanges, I think, because you cannot measure the volume in SEXs.
Current two trading competitions, one is running on Binance and the other one is PancakeSwap. So that one is a DEX. And so two completely separate trading competitions running right now, different types of metrics and different kind of transparency in what you can see. But those are the two currently running right now.
What is the main source where, let's say, I can follow up with some news and updates about the Vaulta progress? Because back to maybe 2021, when I found some errors on my wallet, it was some type of forum or something like this. So it was quite hard for me to understand how all the things works, etc. What's the main source of information right here, right now? Who or maybe what type of company I can follow on X or maybe on a YouTube or somewhere else to stay updated on a daily basis with your network?
Now we're obviously in the transition to Vaulta, and so our domain is changing, and the where I can point to you, the name itself is eventually going to change. Right now, if you go to eosnetwork.com, you're able to find all of the information. If you go in the blog section in terms of official updates, what the network is doing, so that's at a very high level. You can also go to Vaulta.com, which will currently redirect you to eosnetwork.com. That would be your source of information in the future, would be Vaulta.com. If you want to go on socials, on X, we have our official X account for the foundation. That's at EOS and Foundation, I believe.
Drop a link in the description. Yeah.
If you want to reach me on X, I'm Big Beard Samurai. And so our Asian community gave me that name a few years ago. I'm Big Beard. And so now I have a beard. It's been 3.5 years. I can't shave it off. It's part of the brand.
Oh, really?
They started calling me Big Beard. And so my beard has been on for 3.5 years. Yes. Because I can't shave it at this point. Otherwise, I'm no longer Big Beard. My handle is at Big Beard Samurai. And then if you want to find us on Telegram, which is where most of the community lives, which is where most of the kind of the day-to-day conversations occur, same thing, you would search for, right now, we again in the process of changing, but it's now called Vaulta Global. But you can look in the links below and you'll be able to actually find what that is.
I get it. And I want to ask you one question from the Burning Man, because I had a chance to visit the Burning Man festival in the United States. So what makes you happy?
That's a good question. What makes me happy? Working in this ecosystem makes me happy. I actually enjoy very much what I do. I've been in this ecosystem, specifically EOS, for the last 7 years. And many people over the years have left. The community has changed significantly. We went through very difficult times and then some good times and everything in between. And for me, when I wake up in the morning, the first thing that I want to do is get back at it. And so that's on the work point of view. At home, I have my son. He's 5.5 years old. I got my son, my wife, and I enjoy spending time with them. He's just a little, ball of energy. I see myself in him so much, and that definitely makes me happy and brings me joy just to spend time with him, to do activities with him, go snowboarding. We do a bunch of different activities, looking at the world from his eyes. Everything is new. Everything is exciting. Everything is nice. And I think that really grounds me. That gives me a different perspective that, when times are difficult, when there are challenges, that ultimately, if you put it back in perspective, it's pretty good and it'll be okay.
Guys, we are done for today. Thanks for watching. Don't forget to do what you love, because you are the only one who can solve everything if you want it.